Talk about RITES. The case for a chat here being their Q3 sales growth. They managed to maintain their growth and profitability as well. So wanted to chat about not just the earnings, but whether we're going to see a normalization of project margins kicking in, what's going to be their focus, whether it's going to be exports, whether leasing is going to continue. Lots of questions for Rajeev Mehrotra, CMD at RITES, joining in on the show right now. Rajeev, hi, morning. Good to have you on the show. In the 9 months so far, you've grown your revenues to about 1,969 crore rupees. But if you just look at the MoU sales in FY20, they're up 17%. Do you think one needs, you will easily achieve the MoU target, and chances are that you're likely to even see an uptick over there?
Well, looking at the 9 months performance, we are confident that we will not only meet the MoU targets, but reasonably surpass it. That's very visible now.
So could you talk about the order inflows as well in the quarter? The implied number is around 600 crore rupees. Has the slow GDP activity also impacted the order inflow, you would say?
The net order inflows in this quarter have been around 470 crores. And if you look at a 9 months period, we have had 1,447 crores of order inflows, which has almost replenished the work executed by us.
Let's also get in a sense as to what's happening with your exports, because earlier when we'd spoken to you, you were very bullish on your exports. What kind of export orders have you gotten? How is that contributing to your total revenue pie?
Well, besides the order book, which is there 5,782 crores, there is a significant development that we have succeeded in being the only successful bidder in a major export order of around 650 crore rupees to a new market, which is Cape Gauge country market for us. And we are in the process of developing, working on this contract further. I'm very hopeful that by March we should be able to conclude. And this is not included in the order book as yet. Around 650 crores Cape Gauge order for coaches and locomotives.
There is a fear in the market, which is that...
So I think thus we still remain...
No, please go ahead.
Yes. Yeah.
Okay, my next question would be that the orders which you get from railways, is this largely on merit basis, or you get these orders because you are a PSU company and the right of first refusal lies with you? Are they one on merit, or they come to you because of your ownership?
It's happening on both ways. They give us on nomination basis also, because we have that credential of having handled so many projects in railway sector. We are also now competing and getting it. So both ways order inflows are happening. And it's not that there is any first right of refusal, nothing like this. But on merits, we are able to get on both the approaches.
Do you think that in coming 2 to 3 years, 20-25% of your order book could come from non-railway projects? Are you inclined to do that, or you would solely remain on the existing business, which is with railways?
No, we are already a diversified company. Railways broadly would be only about 65. Railway sector, 65%. We already have active presence in metros, airports, highways. And the way, the highway sector is seeing a lot of investment activity in India, airports, now 100 airports announced. We see that it would be possible to diversify the portfolio in other infrastructure sector as well.
Your overall segmental revenue, you've got the turnkey, which has contributed the maximum and held out fairly well. Give us a sense as to what the outlook is there, as well as on consultancy.
Well, actually, consultancy order book has been gradually going on up this year.
Okay, and
turnkey, yes, this quarter we had a good delivery of projects. So you have seen almost 71% increase in the revenue from turnkey. And this is broadly in line with the guidance given for about 500 to 600 crores revenue from turnkey for the current year. So we would be meeting those indicated levels in turnkey segment. Consultancy, because now the sector is going to see several mega projects, we are hopeful that we will be working to build up the order book and also the delivery of orders in hand. The consultancy order book has actually gone up to 25-30 crores, which is enough for us to say at least 2 years to work on.
So how will FY21 be different from FY20, both on the outlook front and also on the operating front?
I think the opportunities, I will say, for 2021 appear to be many more in terms of not only railways investments, but also looking at airports, highways, metros, and also the markets where we are working abroad. The success of Cape Gauge export order would actually give us more encouragement to look at other gauge exports in Africa. So I think I maintain the positivity about the growth in 2021 as well.
For sharing with us the outlook on your quarterly performance, your segmental breakup, as well as the outlook on your orders. That's a word coming in from RITES, and the stock is currently at 310.